What I saw you write recently was something that struck me. We're still in a sweet spot, which people don't seem to understand in a lot of different ways. And that hasn't always been your notion. I think you were a little bit less sanguine a few years or a year and a half ago. You think this is pretty good, a pretty good environment?
Well, we're late cycle, so there is the risk of recession, Joe. I agree with that. It's elevated. We're late in this cycle, but I think it could go on for a little while. Since 1950, when you've been between 1% and 3% inflation, that's really been a sweet spot for the stock market. The stock returns, when you're in that realm, have been 30% higher than they are when you're outside the sweet spot, and volatility of those returns have been 15% less. And if you look at year ahead returns, you only have negative returns about 15% of the time versus almost 25% of the time when you're outside the sweet spot. I think the other thing about it is the average multiple outside the sweet spot, the price earnings multiple, is about 14.5 times earnings going back to 1950. So it looks like there's considerable downside risk. But when you're in the sweet spot, the average multiple is 18.4 times earnings, which means we're slightly below average right now. So I think people are underestimating if we stay in this sweet spot, which looks likely here over the next couple of years, the stocks maybe could do a lot better than people think here yet for a while longer.
That's interesting. Getting back to trade, since we both probably have our own individual opinions on what's going to happen, as a strategist that has to care about all these exogenous things, what do you think the final outcome of this looks like in terms of timing and how much we get accomplished?
Well, I think here's the thing is, I think a lot of that agreement is probably in the market. But the longer it drags on, I think it will again be maybe a positive catalyst when it finally comes to fruition. I think it'll still be a good thing. I think it's going to get done sometime over the next couple months. Eventually, I'm not sure how meaty it's going to be, but if it does get done, I think it does a lot for the Chinese and global economic outlook, and it could go a long ways in reducing recession fears. And if you reduce recession fears, there's going to be a lot of people that find themselves underinvested in equities, I think. So it could still have significant impact, I think, Joe, if it is finally come to fruition.
Heard you talking about, late cycle recession, things like that, and we always say cycles don't die of old age, and we all have our own ideas about what brings about a recession. I guess a financial crisis could bring about a recession, but normally it's inflation, isn't it? And or at least a Fed mistake one way or another. If inflation stays relatively low for whatever reason, whether we're importing it from the rest of the world or whether it's technology, could we have an expansion like Australia that lasts 25 years or something? Is that possible?
Well, I wouldn't rule out anything, Joe. We've arguably had the weirdest recovery ever in post-war history. There's been nothing like this recovery. From the sluggishness to the weird, bizarre policies we've employed to the inability to raise confidence until the last couple of years. Everything's been weird about this recovery. So one weird thing could be it could last much, much longer than people think. I think it's possible. And you're right. I think the end game is probably overheat. Last year, we were ending this recovery. Inflation had risen up to 2.9%. We were going to take it out of the sweet spot. Obviously, rates were going up. Not only the Fed, but bond vigilantes were raising rates. We were shutting this thing down. The fact that we paused the recovery, the fact that we slowed growth, I think is a wonderful result. It probably is going to elongate the recovery, and it's also going to elongate the bull market. And rather than worry about slower growth, we should probably embrace it and invest for it.